everyone, how's it going? In this video, we're going to cover Mullen, trading under the ticker symbol MULN. So, Mullen has been a very exciting and interesting stock to cover, for sure, with a high volatility providing opportunities and also many announcements that may fuel speculations in the month and years to come. It's also a it's also a stock that has a hard time proving to the market that it is a serious company where investors can put their money into for the long term. So in this video, we're going to go through the latest fundamentals, the price actions, and my analysis, plus my recommendation to hopefully help you make the best decision possible. So if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. Mullen operates in an EV manufacturing, distribution, and marketing operations. It acts as a holding for several brands and companies that they have purchased along the way. The latest ones would include Bollinger and ELMS, Electric Last Mile Service. The company first began operating around 2014 as a successor to a previous company called Mullen Automotive. Another previous venture was called Mullen Motorcars, and they were going around developing a car called Mullen GT, one of the world's earliest EV supercars back in 2007. So it's a fairly convincing narrative to say that Mullen has been a veteran in the field. But the question is which field we're talking, right? Is it the field of EV or is it a field of EV hustling? So the sector is known to be highly capital intensive and it relies on other industries that may not be fully mature just yet. So this is one thing. And then we also have the track record of the CEO. The fact that he has created so many companies before also means that he has failed just as many. And there are also, stories like he gave the control of his company to his close associates, and that the shares number has been increased without really a vote coming from the shareholders, so on and so forth. So those are, of course, not always things that are backed by tangible proof, but I do believe that when there are those speculations, there is, or at least was, fire. So for more details, you can take a look at the Hindenburg Research's opinion on Mullen, and you can find it on Twitter. Now, once again, these are just opinions, right? It's very important to state this. It doesn't mean that they are facts, marked in set in stone. So over the past few days, Mullen has been going through a rough patch, for sure. Its price is now below 20 cents, below the 20 cents level, which is a very significant psychological level, and I want to say maybe survival level, right? Remember that this stock has been $15 before, so the fact that we're now hoping that it's going to hold the 20 cents level kind of says a lot about many things. So over the past 50 days, the price action is down by 5%. All things considering, it's kind of slowing down over time, given that this month alone, the stock lost 30% of its value. Things have remained challenging for Mullen from an internal and external perspectives. First of all, the equities have reacted very badly to the announcement that the interest rates are going to keep going up. Because, Powell will think that there's still enough ammunition for many other sessions of interest hikes before the economy goes into recession. At the same time, the lack of progress from Mullen is also testing the patience of shareholders. There's an increasing portion of people who believe that it's, smarter to put money into safer places rather than in the penny stocks. So overall, Mullen has remained mostly constant during that period of time, or stagnating, depending on your way to look at it. The catalysts that we were expecting, like the IGO distribution in Europe, the vehicles deliveries, they didn't produce that effect. either because people don't care or because those events didn't occur in the first place or haven't occurred just yet. So, in terms of long-term price action trends, despite the recent upward momentums, the company has been having a mostly bearish trend over the past 5 years, having traded between $5 to $10 for a long time before peaking around $15, before finally falling back to like the low penny stock levels that we see now. What this tells us is that Mullen has been hard hit by the ongoing stock market downfall, and that its own fundamental weaknesses didn't help. This assessment at some point tried to change a little bit, but in my opinion, it didn't reach a convincing level. Instead of investing in, regardless of the recent distribution contract or the short squeeze, I would say that people are more willing to trade the stock. So sometimes I also want to say that despite the fact that I'm more on a trading, I'm more on a trading perspective with Mullen, it doesn't mean that you cannot invest in the company. Things move very quickly in this field. And whatever that I say now, maybe in 6 months, they're completely different. Because here's the thing. My assessment about Mullen back in summer, it was different from what they are now, right? So the online communities have been skeptical towards Mullen regarding its capacity to survive beyond the medium term. If there's no more EV hype to fuel, the share price or to provide liquidity, the general mood has been transformed from like a very hyped up version of, I don't know, like those of us who have witnessed the 2020 and 2021 era, we know how it feels like whenever a company gives us like the smallest snippet of good news, we're going to find a reason to buy the stock, right? So that kind of vibe. So it changed from that to nowadays it's pretty, I don't know, it's pretty cold, I would say. So far, the online community is sometimes also split in two. So the first one is, the stock is losing the steam. It's not cutting it. Everything that they do is always, either hype or a huge disappointment. And then there's the other side, the people who have a tendency to say that whatever they do is just a good opportunity for me to DCA even more. So pick what you will. I would say that if they can hold the 20 cents level, and this time maybe for a longer period of time, if they can hold the 20 cents level, then yeah, I would say that it would be a good time to DCA, right? But you would definitely have to like control the position size so that you don't lose sleep over something like this, because you might, if it's like 30% of the portfolio, and the portfolio is like as a result of refinancing your house or something like that. So this is like basically what the online mood is. On top of that, the macroeconomic trends within the sector have been under pressure for several reasons as well. And these include like the interest rate hikes that we've talked about, the capital flight from growth stocks back to many other sections, the conflicts around the world, the supply chain issues, and the expectation that there's going to be a recession in the world. And, to be honest, I feel like this recession is going to be around for at least 2 to 3 years. Another factor to look at is how the flagship company of the sector, Tesla, has been doing. Recently, not so hot. The EV sector is a relatively new industry, with much of it still like in the development phase. Very often people determine whether they want to buy EV shares based off how Tesla has been doing. The idea is to profit from a sector-wide gravy train conducted by Tesla, pulling the rest. We have seen on multiple occasions on how the share price of companies like NIO, Lucid, Mullen, they followed a very similar trend to Tesla. So whenever Tesla is not doing so well, so do the rest. Now, Mullen doesn't always follow the same trends as the other companies. This has played in its favor, but we have to be mindful of those factors because they will paint the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which may give us some hint on the decisions that a company could take in the upcoming periods. So the company's cash balance has decreased somewhat, but for now, it is not a major issue as the reserves remain at a decent level. The reason why cash balance is relevant to examine is because cash is used not only to finance the operations, but to satisfy the obligations. If Mullen can't meet those obligations, it's liquidated, it's insolvent. So the company usually has three options: to get cash from its own operations, and that's what it's supposed to be doing, to raise more debt, or to raise more capital from selling the equity. More debt means more obligations to fulfill those, like to meet those deadlines. To get more operations, well, I guess they would if they can, but they can't. So number three is kind of like the only option that's really viable because you're basically just giving a promise but no obligations, right? I promise that everyone buying the shares are gonna do well. Doesn't mean that most people did well, So there's that. The liabilities, on the other hand, is kind of a funny business because it dwindled by $13 million. Nevertheless, that was the period of time that the stock went from 55 cents all the way down to 30. That price movement shows us that although it's a good news, it didn't really carry that much weight when people were not really caring about the long-term fundamentals. The last element to look at would be the profitability. This is one of the biggest weaknesses of the company, and in my opinion, is the main reason why Mullen has remained as a stock to be traded at. The company hasn't generated revenue for more than a year, and despite its best efforts to control the general operating losses, the lack of operational revenue, to be honest, this will dig a big hole in its books, which are going to force Mullen to either take on more debt, to dilute the shareholders to raise capital, or to make additional efforts to increase the revenue. So overall, the financials are showing us that this is a company that wants to stay afloat. In other words, treading water. It's willing to sometimes control its costs, but we definitely need to see the numbers picking up pace in 2023. Otherwise, this will remain a marginal position that people want to YOLO with. So with that being said, the shareholders are mostly retail and they tend to be volatile and reactive, and they also tend to be tunnel vision, which makes Mullen a very good stock to trade the swings at. There might be some institutional shareholders. It doesn't mean that this will carry a lot of weight, in my humble opinion. Now, another major catalyst for Mullen is the short squeeze, or the potential for a short squeeze. The reason why it's relevant is because short positions tell us what a significant chunk of the market thinks of Mullen and whether there will be the potential of a squeeze play. Now, currently, there's about 43 million shares been shorted against Mullen. The vast majority of them are traded outside of exchanges. Now, the potential for a short squeeze is therefore significant. The short squeeze is a phenomenon observed when traders decide to collectively buy up the price of a stock, forcing those holding the short orders to redeem their positions. So the reason why they have to do this is because they're borrowed from brokers and they eventually have to pay it back. The redemption acts as a purchase in the open market, which will then push the stock to higher levels. With that being said, it's really important to control the exposure, regardless of how good the story is or how many stars are aligned. Overall, I would say that Mullen remains a speculative stock to be kept at a marginal position, if at all, in your portfolio. It may have a relevance to start putting in more cash in the stock once we see that it can at least hold 20 cents. Meanwhile, we got to remember that, as many potentials there are also pitfalls. So I would recommend to buy for up to 1% of your portfolio in Mullen. So, make that trade over the next couple of weeks and maybe even month. And then things should go well from there.